This is The Real Story with Michelle Makori.
Hello, I'm Michelle Makori, and you are watching The Real Story, where we go beyond the headlines, beneath the surface, and behind the curtain to show you what is really happening with money, markets, and power. China's President Xi Jinping has just crossed a line that Beijing has spent decades approaching quietly. Xi is now explicitly calling for China's currency, the renminbi or the yuan, to attain global reserve currency status. Xi unequivocally stated that China must build what he called a powerful currency that can be widely used in international trade, investment, and foreign exchange markets, and attain reserve currency status and ultimately be held by central banks as a reserve asset. Now, this is a very clear and very definitive statement of intent. China is openly signaling that it wants the yuan to play a central role in the global monetary system, to reduce its reliance on the US dollar, and effectively challenge the dollar status. And what's just as important, though, is when Beijing has chosen to surface this message. Now, these remarks were originally delivered in 2024 to senior Communist Party and financial officials, but they've only now been made public. Xi's reserve currency ambitions and plans were published in Qixi, that is the party's most authoritative policy journal. And in China, that is very intentional signaling. And the timing here matters because these remarks are being surfaced at a moment when the US dollar is under pressure, global monetary uncertainty is rising, and central banks around the world are actively rethinking how much exposure they want to the dollar. Trade tensions, the growing use of sanctions, and rising political risk have all fed into that reassessment. And China has moved from quietly expanding yuan usage for trade around the world to now explicitly naming its ultimate goal. Now, Xi went further. He laid out the institutional foundations that he believes are required to support reserve status: a powerful central bank with effective monetary control, globally competitive financial institutions, and international financial centers like Shanghai and Shenzhen capable of attracting global capital and influencing global pricing. And where do things stand today? Well, according to IMF data, the yuan still has a very, very long way to go. It currently makes up less than 2% of global foreign exchange reserves. The dollar still dominates with well over 57%, although that is down from around 71% in 2000, and the euro is roughly at 20%. And China still has capital controls, and the currency is not fully convertible. But this is not about tomorrow. This is about direction. And Beijing is making it clear that it no longer sees a dollar-centric monetary system as untouchable. On the contrary. Now, here's the critical question. Why would central banks want another fiat currency in their reserves? The attraction of the dollar is that it is backed by the full faith and credit of the United States. The euro carries a similar institutional promise. So what is the attraction of the yuan? Well, it won't be just another fiat. It is becoming a fiat currency with implicit gold backing. China's officially reported gold holdings have risen to roughly 2,300 tons, and that's according to the World Gold Council. China has been steadily buying more and more gold year after year, quarter after quarter, including at least 14 consecutive months of net purchases through the end of 2025. And that is just the gold on record. Many analysts believe that China holds far more than that. Based on trade flows, import data, and long-standing disclosure gaps, some estimates put China's true gold holdings closer to between 3,000 and 5,000 tons. And there are higher-end, more speculative estimates that suggest China's total gold reserves could be as high as 10,000 tons or more. So Beijing's strategic gold accumulation pulls the yuan closer to a hard asset anchor in an era where trust in fiat alone is weakening. China may be gearing up to offer an alternative linked to gold. Now, China may not be ready and may not want to displace the dollar tomorrow, but it is definitely moving in on King Dollar's throne. Well, joining me now to analyze this further, what it means for gold, the dollar, and how the US may respond is John Butler, John is a veteran financial market historian and author with decades of experience across global banks, hedge funds, and fintech, including senior roles at Deutsche Bank and Lehman Brothers. He's also the author of The Golden Revolution: How to Prepare for the Coming Global Gold Standard. And he also publishes the Amphora Report on Substack, where he analyzes markets through economic history, Austrian economics, geopolitics, and game theory. And today, John advises a select group of private clients and institutions on macro risk, monetary regimes, and wealth preservation. John, good to have you back with us. Thanks for joining us.
Oh, my pleasure, Michelle.
All right, John, a lot to unpack here, and let's focus on what we heard from President Xi, making it very, very clear that China wants a seat at the global reserve currency table, if not the seat. Xi Jinping has made it known. He explicitly said that China wants the yuan or the renminbi to attain reserve currency status. It's been implied for years, but now it is unequivocally stated. So from your perspective, John, how significant is this shift from quiet internationalization to this explicit declaration of intent?
Oh, I think it is significant. I think it is something of a historical signpost. But it's a signpost on a road that China has been on for a long time. China has been growing its economy at a rate well in excess of the developed world on average for many years. Now, we're talking decades, of course. By some measures, roughly 1 billion people, that is, approaching the full population of China, are now integrated into the world economy in a way that they weren't a generation ago. And that's very, very significant. And of course, you see this in so many different dimensions, in so many different aspects. But one of the ones in which you see it most clearly is that China has become the world's industrial powerhouse. They have run large and growing trade surpluses with the rest of the world for a very long time. And those are accumulating into a net asset position vis-a-vis the rest of the world, some of which has been used, as you've mentioned, to accumulate a large gold stock. And the official gold stock may not, in fact, as you also mentioned, be the true official gold stock, just because of the fact that they don't make regular announcements in this regard. They make occasional announcements, which may serve some sort of international, political, or diplomatic purpose. But it could be that they're holding the amount of the gold that they have accumulated as a highly guarded state secret, holding it close to the vest. Something that they can maybe, a card they can maybe play at an appropriate time when they're really getting ready and really getting serious to try and establish the renminbi as a global reserve currency. And the reason why I put it in those terms is because no reserve currency announcement is ever going to be taken seriously. No reserve currency preparations are ever going to be taken seriously if you cannot credibly back that currency with sufficient confidence and trust. And the ultimate source of currency backing for confidence and trust, especially at the international level, historically, is gold. And so that is part of the strategy here, in my opinion.
And I do want to go back to the gold conversation and unpack that a little bit more. But in terms of signal versus strategy here, do you see this as primarily a signaling move? What is the signal supposed to convey? And also, does this actually mark any kind of real inflection point in China's monetary strategy at this point? In other words, does anything actually change after this statement?
Well, in theory, things change after this statement because a statement of intent is, in theory, a mandate to get domestic actors to work in a certain way towards a certain goal. And there are many things that China would need to do if it truly wanted to have a proper global reserve currency. I've mentioned one of them already. That is, you need to establish confidence and trust, the easiest way of which is to have a substantial amount of gold backing for the currency. But there are other things that would also need to take place. Banks would need to prepare for a more fully competitive and convertible banking and foreign currency regime vis-a-vis the rest of the world. You would need to have capital markets that were more open, that were more fully integrated with the rest of the world. And that is something which cannot be done overnight. I mean, it's very doable. People know how to do it. But to properly integrate yourself into the existing global financial system does take some preparation. And so he's indicating that the time for those sorts of preparations has now come, and that domestic actors, both public and private, need to start preparing accordingly.
Right. And look, you could say that capital controls do remain a big structural barrier to any kind of reserve currency status. I just want to explain to our viewers what we mean when we say capital controls, because that phrase gets thrown around a lot. So capital controls mean that China does not allow money to move freely in and out of the country. So if you're a foreign investor, you can't just move large sums of money into China. You can't just buy assets and then move that money back out whenever you want. If you're a Chinese citizen or a company, you can't freely send capital abroad without approval. Unlike with the dollar, where capital flows are open, money can move in and out and freely. You do sometimes need to declare it, but there's no controls. And, foreign central banks can buy U.S. assets, sell them, and then access dollars whenever they need to. And that freedom is essential for a reserve currency. And John, China deliberately doesn't allow that because the Chinese Communist Party wants control. It prioritizes control and stability over market openness because capital controls help Beijing manage its exchange rate, prevent sudden capital flight, insulate potentially the domestic financial system for external shocks. Would China be willing to give that up?
Well, look, these sorts of decisions are full of trade-offs, but the reality is at the international monetary and capital level, you can't really have your cake and eat it too. If you're going to open your capital account, you're going to have to open yourself up to the possibility that domestic actors, private domestic actors, will choose to move some capital abroad, perhaps because they think it's safer to do so. But this is why confidence and trust are key. But they're key on both sides. That is, China can take measures, again, not just acquiring a substantial gold reserve, but also certain steps towards openness and liberalization of its economy. They can take certain measures to build global confidence and trust in capital, the ability of capital to flow cleanly and fairly in and out of the economy. But the same is true elsewhere. Has the United States done a terrific job of building credibility and trust in its own currency in recent years? Running chronic deficits, imposing sanctions willy-nilly on countries who do not follow what the U.S. believes their foreign policy should be and their trade policy should be, vis-a-vis some rather large countries such as Russia and a handful of others that are do not have a particularly good relationship with the United States at present. And so there is you have to look at both sides of that. And so there are things that China would need to do domestically to demonstrate that confidence, that trust has been well earned to the rest of the world. But the United States will also need to reestablish the previous levels of confidence and trust in the dollar if it wants to, say, fend off or at least manage this perhaps not imminent but impending challenge by China to muscle its way in to this reserve currency status vis-a-vis the dollar around the world.
Right, and to your point, hence we have seen this accelerating trend of de-dollarization after arguably what has been excessive weaponization of the dollar. A turning point for many globally was when the Biden administration kicked Russia off the SWIFT system. I think that raised a lot of alarm bells and a lot of countries accelerated.
It did.
Yeah, and a lot of countries accelerated their de-dollarization process. And we have almost $39 trillion in debt. I can't even keep up because that number climbs all the time. And there's talk about it politically to address it. There's now some hope that, Kevin Warsh, the potential new Fed chair, may be able to do something about it. But we know that chatter has been going on in politics for a very long time. And ultimately, it's a very, very big mountain of debt to overcome. Now, the US also has gold, obviously. So I want to bring in the gold dimension here. And one thing that is obviously of significance is China's steady accumulation of gold alongside this push for reserve status. As we touched on, China officially reports over 2,300 tons of gold. Many analysts believe that true figure is much, much higher. Estimates between 3,000 to 5,000, some even as high as 10,000. Help us understand why gold accumulation can meaningfully change how the yuan is perceived relative to other fiat currencies.
Well, if you look at history, what you find is that countries that accumulate substantial amounts of gold tend to have much more flexibility in international monetary and financial matters. They're taken seriously. Their currencies are taken seriously. And therefore, they benefit, other factors equal, from lower interest rates. And if you pay lower interest rates on borrowings, once again, other factors equal, you're able to realize a higher net rate of return on investment and grow your economy at a faster rate. And so this is kind of international economics 101. I mean, it's traditional, though, in the modern age. People don't look at just the basics of that quite as closely as they used to. But once upon a time, that was the holy grail, right? If you were an economy seeking to grow vis-a-vis other countries and grow your market share globally, you absolutely positively wanted a competitive level of interest rates at which you could borrow and invest in your future. And running a trade surplus and having some gold reserves, as well as political stability, of course, were the most important things in order to be able to outperform your global economic competition, as it were. And that word competition is key, right? We're not exactly living in an age of growing global economic cooperation at the moment. We're living in an age of growing economic competition at the moment. That's signaled very, very clearly by a number of developments in recent years, including the new United States national security strategy, which is very heavy in terms of economic policy, not just traditional military policy. And as you began this discussion with what China is doing as well. So, the game is afoot, as it were, in international economic and monetary affairs. And everyone, not just the United States, not just China, but all players in this game. And it is a game. It is a game that game theory can help you to understand. It is a game of competition for who is going to benefit most from lower interest rates, who's going to benefit most from access to critical natural resources, who's going to be the most competitive, who's going to grow their market share. And of course, on all those dimensions, who's going to lose out?
Right. Let's focus on gold here because the US also has gold. Yes, we have $38 plus trillion in debt, but the US also has gold and also has a strong economy, which is being bolstered all the time by the Trump administration and trying to bring back the fundamentals of manufacturing and sovereignty onto US shores. On record, the US is the top holder of gold with over 8,000 tons. That is the official record. We know that they haven't added to the gold accumulation since the 1950s, and obviously the US went off the gold standard in 1971. So how would China having gold be more credible than the US having gold? Does it need to come out and say, hey, actually, we have way more gold? Does it need to do some big reveal and say, by the way, the US has 8,000, we have 10,000, 12,000, whatever it may be? Like, how does it have gold? Just by having gold, how does that boost credibility over the United States? What would be the game plan here for China?
Well, I mentioned a moment ago that I see that there are sort of three key dimensions of building confidence and trust in your currency to make it acceptable as a reserve and to benefit from the lower interest rates and potentially higher growth rates that confers on your economy. The first was simply having a credible amount of gold. You need some gold. You need some reserve. And China already has that. That said, as I mentioned, I think they're holding very close to the vest the exact amount they have for, to be able to sort of play on a rainy day if necessary. But more important than that is simply to be a credible economy, one that exports more than it imports, and therefore is accumulating wealth from the rest of the world rather than losing wealth to the rest of the world. The United States may have more gold than China, but given that the United States runs a huge trade deficit with the rest of the world, would you believe that were the United States not to rely on further amounts of foreign capital to offset its trade deficit, it would burn through its entire gold reserve in about 1 year's time? That's it. The United States has gold net import cover vis-a-vis the rest of the world at current gold prices of only about 1 year. Now, as anyone who has analyzed emerging market credit in their career, as I have at times, knows 1 year of import cover isn't great. It's not great at all. It's not perceived as a particularly good buffer. It's not zero, but it's not great. Taking an economy and making it fundamentally more competitive vis-a-vis the rest of the world inside of 1 year is a very tall order. And therefore, countries that get into that situation, who lose a bit of the world's trust and confidence, tend to devalue their currencies instead as a quick way to restore relative economic competitiveness and to stem the outflow of reserves, including, of course, gold reserves. So the U.S. is actually in a potentially difficult position here vis-a-vis China. China's the more competitive economy. They're the ones building reserves. They're not as dependent on foreign capital as a result, and they have accumulated a lot of gold. The other dimension, though, is political stability. China will need to be perceived as a politically stable regime by the rest of the world, or it's not going to realistically achieve reserve currency status. But what about the United States? Now, yes, I do believe the United States is a fairly politically stable country, but it's not perfect. And there are all kinds of political issues in the U.S. today, some of which are fundamental constitutional issues vis-a-vis the relationship of the executive to the Congress, to the Supreme Court, where certain things are a bit up in the air. And the U.S. may, in the eyes of the world at least, lack the same degree of long-term perceptions of long-term political stability vis-a-vis, say, where things were, 40 or 50 years ago, for example.
Right. It's a different way that the United States is perceived on the world stage than, say, the Reagan administration, where American exceptionalism was a given and granted and celebrated even. And the reality is, you can blame whatever side you'd like to blame, but the political landscape is exceptionally divided and exceptionally toxic in the United States at the moment. And that ultimately does perceive how the United States government is viewed on the world stage. You made an interesting point about China's economy and gold just being one part of this equation. I would like to point out that as things stand, according to the IMF, the yuan's share of global reserves is at under 2%. The US accounted for approximately 57% of global reserves. Currently, that is down, though, and that's the trend here, from 71% in 2000. The euro is at roughly, give or take, 18%. But here's what's interesting, John. The yuan has made significant inroads in specific areas, like in trade. So since Russia's invasion of Ukraine in 2022 and that weaponization of the dollar, the yuan has in fact become the world's second largest trade finance currency. So that Russia-Ukraine conflict fundamentally accelerated de-dollarization efforts as Western sanctions pushed Russia and its trading partners towards alternative payment systems and to China and to the digital yuan. enter the digital yuan backed by a neutral reserve asset of gold and enter this whole idea of it's now the number 2 trade currency. So you could say that it's already a significant challenge to the dollar, and perhaps gold, or revealing these gold reserves, would just be that final piece in the puzzle.
It could be. It could be. China's economy has issues, but show me a large economy in the world today, including the United States, that doesn't have issues. We've just discussed some of those. China has issues regarding global perceptions of its long-term political stability, but again, show me a large country in the world that doesn't have some of those issues, and so it really is a world in which it's difficult to make black and white comparisons anymore, and this is what multipolarity looks like, right? This is kind of what it looks like. There might be a cleanest dirty shirt, but there's also a dirtiest clean shirt, and it's not clear where the two meet. So we're talking shades of gray here, of shades of dirt, as it were. So look, the United States is, in the eyes of some, and I would put myself in this group, excessively and dangerously dependent on legacy perceptions that are now changing rapidly. China is still trying to shake loose some legacy perceptions of where it is at. And probably its single biggest problem, other than specific policies on the economic and financial and monetary front, is that it's still not seen by the world as an economy, as a country that allows a full, open discourse and debate regarding what is the true national interest, what is the true national economic interest. And can we please have a nice, full, open debate on that without repercussions of some sort of political reprisal because someone said the wrong thing at the wrong time at the wrong party conference. So the fact that the U.S. at least has a vigorous internal debate, however acrimonious at times, I would actually say is probably to the U.S. advantage. That is, countries around the world at least think that what they see is what they get to some extent with the United States, because they can see the debate taking place, whereas you don't even necessarily know what's being discussed behind closed doors in China. So I think the United States has benefited from a degree of openness through its entire existence, probably vis-a-vis, well, previously the Soviet Union, say, and vis-a-vis communist China in more recent decades. But that could change. That could change. And the world, I think, may have greater doubts about the U.S. Given that the growth of, what do you want to call it? The so-called deep state, secrets that are withheld from the public for whatever reason. I think there's a global perception that more of that's gone on in recent years than in years past. I mean, it always goes on. All countries play that game from time to time. But I think the U.S. still has the opportunity to take the lead with respect to that traditional advantage vis-a-vis China. That is the openness. But it has to come to terms with the fact that it's a chronic trade deficit country, a chronic budget deficit country, although China is too, and one that needs to secure its perimeter in this new multipolar world and correct the mistakes of having dangerously overextended itself in Eurasia with hugely costly foreign wars that have had, in the opinion of many, and this includes me, very, very detrimental impacts on its foreign relations in certain parts of the world. And you mentioned this one, right? The war in Ukraine and all the sanctions associated with that. And one could even put Iran into that category. I mean, I'm not going to defend the regime of Iran here at all, but all I will say is that the U.S. has had sanctions in place on Iran since I was a child. And I think that has caused a certain amount of damage in terms of U.S. relations with the rest of the world, seen as a a fair broker, an open economy, one that wouldn't weaponize its currency. And yet it's been a bad habit for a long time now.
Well, for all of the flaws of the United States, I would still very much rather have the United States as the global superpower than China, than Iran, than Russia, for all of the issues that may come with it, and certainly not perfect, but at least it espouses the values of liberty and freedom of speech. We may see some
And
cracks
those,
every now.
and if you ask me, those have recently made a comeback. And that's kind of what I meant to imply with my comment there. I actually think it's important that those traditional American values do make a comeback if the United States wants to retain this image, this shining city on the hill image that it's had for much of its history.
Well, it needs to retain that image, and it also needs to project strength on the
Yes.
global stage.
Agreed.
Keeping in mind that military might is what got the dollar the global reserve currency status in the first place by helping the Allies win World War II, and hence we had Bretton Woods. So, how do you see the Trump administration, which arguably you could say is certainly exerting strength on the world stage? It is invoking some fearful deterrence, whether you agree or not, is projecting an inclination. We will use our military if we have to. How do you see the Trump administration responding to this, and particularly these new comments from Xi? Do you think that there hasn't been any formal response as far as I know, but what realistic options does the US have in terms of a response now?
Well, you mentioned earlier, right, that Trump appears to be trying to rebalance the U.S. economy away from excessive dependence on foreign capital to help finance the twin deficits, the trade deficit and the budget deficit. Yes, that is a very, very fundamental problem. The U.S. has run these chronic deficits for decades, and that is a real malaise. It's a real structural malaise that the U.S. needs to sort out. It needs to make itself more competitive vis-a-vis the rest of the world. It needs to raise the rate of productivity growth, and it needs to have a competitive labor market. All of those, or those two things, they both require sensible, light touch regulation for business, sensible, one would hope, tax policies that are low tax vis-a-vis the U.S.'s competitors around the world. That's what made the U.S. great. The U.S. grew as a relatively low tax, relatively low regulation economy, and one with sound money, of course, right? And the U.S. becomes the preeminent global economic power due to a primarily, not always, the Civil War and a couple other exceptions prove the rule, though, that the U.S. was generally a sound money economy during the years of its economic ascendancy. And so the policy set that made the U.S. great, which incidentally did include tariffs, the policy set that made the U.S. great, perhaps that policy set can help to make the U.S. great again. It's kind of simple reasoning, and yet there's a lot of evidence to that effect. And so this is something that Trump, I believe, kind of has always in the back of his mind as, the minutia and the details of day-to-day, being the president and whatnot. At the back of his mind, he's kind of aware that we need to try to get back to this. We need to try to get back to what made America great in the first place if we want to make America great again. And certainly, if you look at the way Europe is going, they're going in the opposite direction. And if you look at the way certain other countries are going, they're going in the opposite direction. But some are not. I mean, there are some, very competitive economies out there who are making sensible decisions. Here in Europe, for example, I would signal out Italy as a country that has made some sensible, fundamental economic decisions in recent years. And I know that in Latin America, it appears that the political pressure and movement in Latin America is towards more economic competitiveness and dynamism again, following a period of flirting with a bit more socialism. So I mean, that's very encouraging for those regions, but the U.S. will need to dig deep and rediscover what made it great, if indeed it wants to face up to the military and other challenges. The basis of all military power, the basis of all political power globally, the basis of all cultural influence globally, I would say, all have their roots in economic power.
Make America great again. It's basically what I'm hearing you say. That is, of course, the Trump doctrine. You know, you talk about Europe. Poland is arguably also doing a very good job with trying to get its economy back on track. Poland's also accumulating a lot of gold. That's made it a very clear strategy that that's how they see things going. But beyond bolstering the fundamentals of your economy that made you the global reserve currency in the first place, um, is there any action you foresee being taken? Are we going to have some kind of military action? And you could argue that some of this move into Venezuela, which was military action, is part of the Trump administration's way of asserting dominance, or at the very least, controlling its perimeter, a la the Monroe Doctrine, or the Monroe Doctrine, as it's been called. Do you see anything more, I guess, on a military side, or something beyond just accelerating the growth of the economy and going back to those fundamentals?
Well, I think what's important to understand here is that even though economic power is the base of all the other dimensions of power that I mentioned, nevertheless, military power does remain important. Think of military power to me, it kind of represents how well you can build and maintain the fences that you want to be able to defend around the world. And the United States is blessed in this regard because they have when it comes to global power politics and military and security issues, they have a natural perimeter, and that natural perimeter is provided by two very large oceans. And then, of course, the Arctic region, which is the one that's currently at sort of in play, you might say, with Greenland and everything, is one in which most, not all, but most sort of military type operations are very, very difficult to execute. That said, modern technologies make that somewhat easier, which is one reason why the Arctic has gone so hot. Yeah, forgive the pun there, but this is important. It is important, and I think that the new national security strategy lays it out rather well. But oddly enough, this is not a new idea. And if you go back to the presidency of Theodore Roosevelt, Roosevelt was explicit that while the Monroe Doctrine, he believed, was established doctrine by the time he was president. I mean, it had been stated decades before he became president. It even predates the Civil War. And Roosevelt, of course, is early 20th century. But Roosevelt was very explicit, saying, not only is this doctrine about keeping European influence out of the Americas, it's about the United States being able, willing, and justified in exerting its dominance across the Americas as and when it believes it serves the U.S. national interest. Now, that was very controversial at the time, and it made President Roosevelt persona non grata in much of Latin America during and even after his presidency. Yes, occasionally he'd get invited to a Latin American country to speak about whatever it was, but it was usually by a fringe party, right? One that wasn't part of the existing governing mainstream, who wanted Roosevelt to show up and give a speech and legitimize their economic and political views. So in a way, Trump is echoing Roosevelt and saying, we need this perimeter. This perimeter, maintaining this perimeter is in our national interest, and we will do whatever we need to do to maintain this perimeter. And any country, anywhere inside this perimeter that invites unwanted foreign influence is going to subject itself to U.S. intervention. And what just happened in Venezuela is a perfect example of that, because Venezuela had cozied up to China. They had cozied up to some extent to Russia and Iran. And that was seen as unacceptable under this Rooseveltian, now Trumpian interpretation of the Monroe Doctrine.
I mean, I guess the question remains if we can expect to see more action of that nature. We know the Trump administration has its sights set on Greenland, but do you expect, because to be fair, John, you actually predicted this move into Venezuela when we spoke last year before the Trump administration took that action. You hinted that you could see that happening, to give you credit where credit is due. Do you think that it stops with Venezuela?
I think Venezuela sets a precedent that is so blatant and so in everyone's face that I think further similar actions are probably going to be unnecessary. And there are two reasons for that, one of which I already mentioned. There appears to be a natural swing towards more traditional conservative American hemisphere focused policy throughout Latin America. That's number one. Number two is all the back and forth on Greenland has exposed just how weak Europe is, both militarily and economically. They really look weak. And the idea they could somehow stop the US exerting whatever influence it desired over Greenland, it's so obvious to everyone who looks at it now that is just not credible. It's really, really not. And I have to say, and I know this is going to offend some people, but the same is pretty much true of Canada. And I don't want to put Canada in the same basket as Greenland here. But the reality is that, now I forget what the statistic is, but something like 2/3 of Canadians live within about 20 or 30 miles of the US border. Canada's military is so integrated into NATO, it's not really able to operate independently in any meaningful way, unlike the US military, which does not need NATO to do what it wants to do, depending on where it is in the world. Look, I don't want to go too far with that.
Are
All I
we
want to
making
say,
are we making Canada the 51st state,
no,
John?
no, but all I want to say is that in this new world into which we're entering, taking Carney's own words into account, the challenge for the so-called middle powers, as he calls them, including Canada, is that they need to accept the reality that great powers do what they will and do as best they can within that challenging context to nevertheless try and realize as their own national interests.
Which
But
is
the
how it's
problem
played
is,
out for thousands of years, John. That's just how history
well,
has
there you
always
go.
played out.
So I actually think Carney's speech is somewhat misunderstood. He's not standing up to the US or other great powers as much as he's acknowledging that there is this new era of great power competition and that Canada is going to have to be very nimble and very flexible if it's going to be able to pursue its own national interests in that context. But hello, who do you have a border with? It's pretty obvious which great powers' interests are going to be the strongest influence on your own domestic policy choices. And there's no getting around that. And I think his own words kind of acknowledge that, even if he didn't want to say it in quite such a blatant way. That's all.
Right. But John, despite all of these moves by the Trump administration, ultimately, is dollar hegemony over? Is a multipolar world inevitable?
I think a multipolar world is already here, and it will only get more multipolar from here. The dollar reserve system that we still use around the world is a legacy system. It's a legacy system that no longer correctly reflects this multipolar world. And it's only a matter of time before dollar hegemony is properly challenged. And it could be that China acts alone, although I doubt it. My guess is that China, together with other countries, will begin at some point to try and work their way to a new global monetary system, one that is perceived as fairer for all those countries who up to this point have not enjoyed the benefits of reserve currency status, including, of course, lower interest rates that I discussed earlier. Well, guess what? This is exactly what Charles de Gaulle said in a famous speech from early 1965. He felt the Bretton Woods arrangements were not fair and that they disproportionately benefited the United States. And he said, we should renegotiate this Bretton Woods system. We don't think it serves our national interest. And that led to a series of crises. It led to a run on the U.S. gold stock, ultimately, and that blew up the Bretton Woods system. Initially, people thought that was temporary, but it ended up being permanent. But the world was still largely, if not completely, unipolar and hegemonic in the late 1960s and early 1970s. The Cold War was still raging. That is not the case today. The world today looks very different. Back then, the US was over 1/3 of the global economy. Today, it's barely 20%. That's a big shift. And as we've already discussed, the US runs chronic deficits with the rest of the world. The US is dependent on foreign capital, not the other way around. The US's gold reserve would cover only about 1 year of its imports. Other countries are net exporters. They don't necessarily even need gold reserves. So, to paraphrase Ernest Hemingway, how did the world go from being unipolar to multipolar, not only in underlying economic, but also monetary terms? Well, first slowly, then suddenly. And that's the way it may happen this time around. But I don't think China acts alone. I think they would do it in concert with the other BRICS.
Right. Well, that brings me to my point that I wanted to ask you. How does China coming out and making this declaration that it wants to be the global reserve currency fit in with what they're doing with the BRICS and the joint currency ambitions there, the unit, which is backed by 40% gold in a basket of the group's currencies? How does China's ambitions for global reserve currency tie into that?
I suspect, although I can't know this for certain, of course, I suspect that China is indicating that they may be willing to take a leadership role in this. That is, someone's got to step forward and represent the BRICS' collective interest in trying to have a more multipolar international monetary system. But whether China acts alone or in concert with the BRICS, one reality will not change. Gold will have to be a part of whatever the new monetary system is going to be, or it simply won't be credible. How on earth do you establish trust and credibility in a world in such flux when countries are having trouble trusting one another in military matters, in economic matters, in all kinds of matters? You need gold as the true international money. No one can print it. No one can default on it, as it were, because it's a rock. No one can arbitrarily devalue it. It's a rock. The price is what the price is at the international level. Gold is the ultimate, neutral, immutable international money. No other money historically has ever been a global reserve that wasn't backed by gold, with the single big exception of the unipolar, hegemonic US dollar from 1971 up until the present day, which, in the eyes of an economic historian, is kind of the blink of a historical eye. This has been the exception historically. And we're going to go back to something much more traditional, much more similar to the traditional classical gold standard, where countries traded extensively with one another, but periodically settled their trade balances in actual gold bullion. I believe that's where we're going. I've written a book about it. I wrote that book over a decade ago. The newer edition is only about 7 or 8 years old now, but I'm not the only one either, right? I mean, there are lots of us who have been looking at this for a long time, and recent events only build my confidence that this is the road we're on. We're on the road to the remonetization of gold as an actual international money to settle cross-border trade imbalances. That implies a huge shift in the demand function for gold. Countries the world over are going to want to hold more gold in reserve as the role of the dollar declines and the role of other currencies, such as the renminbi, that may be outright backed by gold increases. That's where we're going. And the recent bull market in gold, and by extension, you could say other precious metals, reflects probably to some extent the beginning, but hardly the end, of that shift in the demand function.
Right. I like that line, dollar dominance is a blink or a flash in the history of money. I think I'm quoting you correctly there. Two questions as we wrap up here. Do you think, John, that China is ultimately gearing up for a big reveal of its gold holdings now that it says it has these global reserve currency ambitions? Do you think China will ultimately do a big reveal of how much gold it really has? And what kind of
Well,
timeline would that be on?
right. Well, again, I can't possibly know what the timeline is. I would say it's probably not imminent, but history sometimes happens in weeks rather than decades, as Lenin famously said. So it could, in theory, happen anytime. I do believe China has significantly more gold than they officially declare. But again, that's a card they're going to play when the time is right. When they want to establish greater trust and credibility in their currency, among other things like opening up their capital markets and whatnot, they will say, "Oh, and it just so happens we have 3 times more gold than we previously said we did." That will help. That will help to build credibility in their currency if and when they make that move. Again, it could be they make that move on their own unilaterally. I think it's more likely they do so as some sort of collective BRICS move, but I can't possibly know that for certain.
And again, I'm asking you to speculate here, but do you think that in order to counter this to some degree, that the Trump administration, and perhaps even previous administrations, but there's reason to think that the Trump administration may have been doing this, has begun some kind of covert or shadow program, buying gold behind the scenes, not explicitly stating it, perhaps utilizing the ESF, the Exchange Stabilization Act, a fund rather. Do you think that that could be something that's happening behind the scenes as the US is gearing up for this China reveal, bolstering its own gold supply?
Well, look, you can't rule it out. What's interesting about the Exchange Stabilization Fund is that it was set up a long time ago, right around the same time the Fed came into existence. But it's evolved over time and it's been used for a wide variety of purposes, including COVID financing. It's been used for all kinds of things. In a way, it is the executive slush fund. I know that's a pejorative term, but basically, it is money that the executive is allowed to spend pretty much on whatever it wants without congressional approval. And it's potentially a lot of money, in part because of the precedent set by the enormous amount that was made available for possible COVID emergency spending. So the fact that it's available to the executive and without congressional oversight, eventually you'd probably have to declare what you were using it for. But the idea that in theory it's there, could it be that the Trump administration is using it covertly to acquire gold, silver, perhaps other critical metals? Uh, there's almost no way to know unless you're an insider. But there is some intriguing historical precedent for this. The Exchange Stabilization Fund has been used for foreign exchange intervention. It's been used for guaranteeing foreign debt. It's been used for COVID financing guarantees, all kinds of things. So who knows? So there is that possibility. There's also another possibility, and this is a conspiracy theory, so forgive me, please. But there's also the possibility that the U.S. actually has more gold than it says it does, just like China. It's possible the U.S. gold reserve is larger than the official reserve. And one very, very curious series of events takes place at the end of the Second World War. It's well known and well documented that during Japan's occupation of China and of much of the Pacific Rim, Western Pacific Rim, that they basically confiscated pretty much all the gold they could get their hands on. But then as their perimeter began to shrink and as it became clear that they were probably going to lose the war and have to retreat back to the Japanese mainland, that there was a real scramble for what to do with all this accumulated gold that they had again just confiscated from everybody in that region. And apparently a lot of it ended up on the island of Luzon, the largest island of the Philippines, and they weren't able to get it out because by the time they got their act together, the U.S. had a full blockade on and was invading the Philippines and so on and so forth. And there's some evidence that some years later, the U.S. discovers this enormous Japanese gold hoard on Luzon. But this takes place after President Truman has signed the National Security Act and created the CIA, allowing them to operate covertly in all kinds of areas of operation. And some believe that this gold hoard was discovered by the US military and then was effectively, the control over it was effectively acquired by the CIA, which has been using this enormous gold hoard opportunistically through the decades as required to fund its operations, whatever they might be. Look, truth can be stranger than fiction, right? Who would have thought that the CIA would have been involved in running guns from the Contra rebels in Central America to Iran as part of its effort to keep the Iraq-Iran war going back in the 1980s. I mean, look, you can't make this stuff up. Anyway, I'll just leave that out there for people to look into. If you want to look into it, look into it. There's actually a lot of circumstantial evidence to this effect.
You know, that is very fascinating, John. This is why I love talking to you as a historian. You're always giving me new nuggets to look into, pun intended there. I didn't know about the Luzon one. I do know that there's been speculation that the U.S. could have Gaddafi's gold, that may have been confiscated because that went missing. And we know that Gaddafi was trying to launch some Pan-African currency backed or linked by gold. That went missing after he was deposed. And Saddam Hussein apparently also has some gold that went missing. So there is a speculation, again, speculation conspiracy, that Fort Knox may indeed hold more gold than we believe, not less gold. And perhaps that's why we haven't had that audit, because that grand reveal by the United States isn't ready to happen yet. And perhaps that would be the counter to China's move. Hey, we've got this much gold, and the US goes, well, that's great. Actually, we've got way more. That would be interesting. That would certainly be interesting. And again, we are speculating, but based on facts and historical precedents to some degree. So, John, as we wrap up here, given what we've just discussed about gold and given this current recent comment by China, do you have a gold price outlook? And I know that's not typically your department to give gold price outlooks, but obviously we had gold almost hit 5,500 and then a significant pullback. It's trading just below 5,000 at the time of this recording. Where do you see gold going next?
Well, look, I do believe precious metals prices, not only gold, are going to continue to move higher. We've seen a huge correction here. It's historic in size, and yet, if you look at the way the market was trading, it did look like a lot of short-term speculators were just chasing it and didn't have any care or any eye on fundamentals at all. And they've been shaken out to some extent, if not completely now, which is healthy. And that's how markets work. You know, that is how markets work. They do so-called overshoot, but then they find their way back into whatever trend makes fundamental sense. And in this case, the trend that makes fundamental sense is for gold and other precious metals to keep moving higher. Why? Well, it's not only the United States that runs chronic deficits. China does too. Europe does too. Government deficit spending and the money printing necessary to finance those deficits is the most common global economic policy set. And other factors equal, if the money that you print is growing in supply and the money you can't print, gold, is not growing in supply, at least not by very much, then what price is going to clear the market in the future? It's obvious. The price of precious metals has to keep moving higher. It will only stop moving higher when the policy set in the United States and elsewhere in the world fundamentally changes to one of not running deficits, not being reliant on inflationary finance by the central bank, not making promises you can't keep, be they entitlements or who knows what else, not fighting wars that don't really benefit you and the national interest and simply cost a lot of money and maybe make a handful of people wealthy in the process, but not the country as a whole. That policy set has to change. It has not changed yet. I do hope it changes. I absolutely hope it changes. And history suggests that someday it probably will change because, you know, all governments eventually run out of their people's money if they spend too much of it. So, but in the meantime, and by the meantime, we're talking years, in my opinion, precious metals are going to remain in an uptrend. You'll have the occasional speculative frenzy and occasional setback, but the uptrend will remain.
Well, we have JP Morgan coming out and saying that they see 6,300 gold by the end of this year, 6,300 gold, and 8,000 gold by 2030. This is out of JP Morgan. Do you concur? I'm trying to get a price level out of you, John.
Okay. All right. Look, what happens next year is anyone's guess, or this year. I do think we finish higher than we are now, but I'm not going to make a bold prediction on just how much higher. What I will say is this: 8,000 by 2030 is conservative.
I would say
that's
so
what
too.
I will say.
Yeah, I would agree. Yeah, I would agree that 8,000 by 2030 is conservative, and they describe that as a fundamental re-rating of the metal's role in the global financial system. Should we hit 8,000 by 2030, I think that is...
Look, Michelle, I'm sorry, but 8,000 by 2030 is not a fundamental re-rating. Okay?
I would agree. I'm reading their notes here.
That number and that language are not compatible with one another.
As I completely concur with you, I think that would be a much, much higher number. But of course, I don't think they want to really put it out there that dramatically. I'm surprised they're even going so far as to say a re-rating of the metal's role in the global financial system. John, it's been a pleasure chatting with you. If people want to learn more about you and your work, I know you've got four on Substack. Where can people find you?
That's the easiest place to start. I mean, I publish research elsewhere, occasionally guest articles and whatnot. I also show up at the occasional conference and whatnot. But the simplest way to become familiar with and follow my work is to find my Substack, the Amphora Report at .substack.com.
All right. Well, thank you, John. I always appreciate your historical references, which you weave into your work. That's always very informative. Although, as they say, the biggest lesson in history is that people do not learn the lessons of history. Anyway, thank you, and I look forward to catching up with you again soon.
Oh, thank you, Michelle. My pleasure.
And a big thank you to our viewers for watching. I really appreciate you spending the time with us. If you enjoyed this conversation, please make sure to subscribe. Please share it with your friends and family. Leave a comment. Let us know what you would like for us to cover next. We do read those comments, and we take that feedback very seriously. So feel free to praise, whine, or just opine. And if you'd like to learn more about building a precious metal strategy, you can reach out to info@Miles Franklin. We have a team of specialized advisors and brokers that can guide you. And if you mention my name, we'll give you an extra special deal. Also, remember to check out our website, milesfranklin.com. Thank you again for being here. We'll see you next time on The Real Story.
This is The Real Story with Michelle Makori.